So thanks for joining another session of CarbonCurious. The focus for today is the recent market updates and changes and some of the implications for you and your land. As before, please make sure your video and microphone will be muted. Oh, they already are. This webinar will be recorded and it'll be available afterwards. Use the Q&A function to ask any questions that you've got. We've already possibly got more questions than we're going to get to, but if your question is not answered, we will follow up afterwards and make sure that we get you an answer. As I said, focus for today is what's new with the ETS and with some market updates and some of the recent changes. I'm Nick Butcher, I'm the co-founder of CarbonCrop, and we should have Quintin Tahau joining us from emsTradepoint, where he's the general manager, to give some particular perspective on the recent price trends there. If not, I'll do my best, but I'm no substitute for Quintin. As I mentioned, drop any questions you have in the Q&A section. Before I get into it, a little bit of background on who CarbonCrop is. I'll keep this very brief because I know there's a lot of recurring attendees here. Basically, we're a company that helps people get their forests recognised for the carbon that they store under various carbon market incentive programs. We've assessed more than 1.9 million hectares across New Zealand. This number's actually a bit old now. It's now a lot more well into the mid 2 millions. And the good thing is that our approach is working. We have paid out more than $20 million to landholders for the carbon being stored in the forests in their land, and we've helped more than 250 landholders get registered into the emissions trading scheme. And the even better thing is that it's now expanding. So the history of CarbonCrop has really been that we helped individual landholders register their forests within the emissions trading scheme. We're now opening the technical platform up to everybody on the supply side of the forest carbon ecosystem, which includes consultants, developers, primary sector processors, and businesses looking to achieve net zero, and allowing them to effectively work with large pools of farmers, helping them restore forest, which means that the value becomes a lot more broadly available and we can have a much bigger impact. I think we still don't have Quintin, so I will try and make some brief commentary on the background of emsTradepoint, but I won't get into any of the details. emsTradepoint is one of the trading platforms that we work with to help people sell, or if you were to choose to buy carbon within the emissions trading scheme in New Zealand, so NZUs essentially. They started with the goal of bringing additional liquidity, transparency, and access to the carbon market. And the profile here is essentially showing how they've been able to do that, starting from the first trade back in February 21st. And then here you can see the fraction of their trades in terms of monthly emissions trading register transactions versus non-emsTradepoint trades within the register. So you can see they're having quite a significant impact. I will do my best on this, but basically this, as anybody who has NZUs is probably quite conscious, the carbon price has remained reasonably volatile, and over the last 12 months really it's been especially volatile even by historic volatile standards. I'll quickly go through the timeline here. Coming into the end of last year, we were at basically all-time highs in the mid sort of $85 kind of range. On the 16th of December, the government made a decision not to adopt the recommendations of the Climate Change Commission and the price control settings, and that saw the price sharply drop immediately and then begin basically a steady decline through until March, when the auction failed to clear, and immediately afterwards a review of the ETS was announced with consideration of the ETS structure. This led to a significant loss of confidence in the government's commitment to the ETS mechanisms, whether rightly or wrongly, and the consequent price collapse, which continued through to the consultation of the review, where there was another failed auction and another even larger price collapse. In roughly the middle of July, the High Court ruled, following an action brought by Lawyers for Climate Change, I think the group is, I've probably got the name wrong, but huge credit to Quintin, fantastic. I'll wait for Quintin to finish the talk through because I've probably done a horrible job here. Hi, Quintin. Thanks for joining us. Great to have you.
Yeah, hi, Nick. Sorry about that, everyone. Start without me.
Right. I did get into it, but I've done a lousy job. So I've done a very brief intro to emsTradepoint, but I probably did a terrible job. So if you want to give a bit more background to emsTradepoint, I'll jump back to this slide. And then I'm about halfway through the price change history. Over to you.
Okay. Cool. Thanks very much. Kia ora, everyone. Yeah, so my name is Quintin Tahau. I am the General Manager at emsTradepoint. So for those of you who don't know us because you haven't signed up, let's sign you up at some stage. So we'll get hold of you after this. So yeah, we're a subsidiary, wholly owned subsidiary of Transpower New Zealand. So our primary focus is on the energy market, but carbon was added to our exchange in March 2020. The slide that I've got up here, or the chart that we're showing here, shows you some quite interesting stuff as far as I'm concerned, because one of the things that we're really keen on doing with the carbon market is opening it up. It's a fairly opaque market, fairly difficult to transact unless you're one of the big players. And when our goals are around decarbonising the power system, we can't have that. So we wanted to put something in place to encourage activity, to encourage transparency on the carbon market. And so really cool looking at this slide. It just looks like a bunch of lines, but the blue line shows, I guess, all of the transaction history, monthly transaction history on the emissions trading register back to day dot, and when the first trade went through in 2009. And our goal was to, one of our goals at least anyway, was to make it easier to get involved in the carbon market, and to enable smaller players in particular to have access to the market. So when we have a look at when our first carbon trade happened, it's noted in February 21. We're only a tiny little blip on all carbon trading activity. But as we move along through to October 23 or September 23, I should say, you can see that green dotted line, and that shows where emsTradepoint is sort of added on top of that carbon trading activity, to the point where there was a new record set in August 2023, a record trading level through our market, but also record volume through the emissions trading register, and all because I think a large part of the new activity is you guys. It's CarbonCrop participants who started signing up with us this year, and really through February, from February through to April, May this year, and we're still getting more people join us, which is fantastic. So thank you very much, Nick and co, and to all of you who have joined our marketplace. It's certainly added a lot of different flavor to the carbon market, and that's been fed back to us by, I guess, some of the more traditional players in that carbon space. So yeah, while it looks
thank you
like
for making it available. Like, you've certainly made life easier for a lot of our customers who've wanted to. Yeah, I mean, the incentives work only when you can actually turn them into, realize the value of them, and yeah, we appreciate the work you've done there.
Yeah, and we've got a long way to go too. I mean, we're there. You can access the market, but we want to keep improving things. So when people have feedback for us, we take it, and we try and do something with it. So if anybody out there has got some suggestions around how we could do things better, definitely feed them back to us. Won't always happen, but we'll bake it in where we can. All right, so where did we get to on the price chart?
I got about halfway through. I was just talking about the High Court auction setting ruling, but I think it'd be interesting to get your take on the consequence of this ETS review consultation and then the subsequent recovery. So if you start from ETS review consultation released, what that was and the impact of it, that'd be great. The previous bits I think I've covered in reasonable detail.
Excellent. So thanks, Nick. So the reason I included this graph, and it's timely that you've pointed out the ETS review consultation, is that, or appropriate at least anyway, is this is one of our key artifacts that we included in our response to that consultation paper. There was an assertion made, as you're probably all aware of, that forestry was negatively impacting on the carbon price, or the NZU price, that wasn't achieving the levels in order to see change in behaviour or for emissions reduction targets to be achieved that the government had set. And there were assertions that were made in that consultation paper that weren't really founded on much that we could tell. If you have a look at the trajectory of price prior to this chart, prior to December 2022, it was a reasonably steady growth to where it peaked in November at around $88. I think actually the record trade through our platform was $91. But it was a reasonably steady trajectory. You could see where it was heading. And then pretty much from the 16th of December, when Cabinet decided to not adopt Climate Change Commission advice, and then all the subsequent policy decisions, you can see actually the biggest impact on price is not forestry, it is government policy, either announcements or utterances or actual decisions made. And so those are the, I guess, the bluey purpley bubbles that I've highlighted there.
I wonder
So
if it's
yeah,
worth
that was a
quickly
key.
mentioning the specific advice, because because it wasn't in relation to forestry at all from memory either. It wasn't the 16 December advice that was specifically around the price control settings for the auctions, which have nothing to do with
That's
forestry at all. Yep.
No, that's right. So the government chose to, I guess, ignore the Climate Change Commission's auction setting advice, and those were key settings for the 2023 auctions, which essentially lowered the cost containment reserve from where it is for the next auction at $170 down to, I think it was $80, and the auction floor price was supposed to be $63 or something like that, $60, and it was lowered to
30-ish.
$30, I think it was, for all of this year. And that really did put a dampener on the auctions, for sure. And it's no real surprise that each of the auctions has failed this year, and whether the December auction is going to clear is yet to be seen, but it's not looking great. I mean, there are 14 odd million units up for grabs in December this year. So yeah, in terms of the review, where forestry was noted in there, it was the focus is around of the ETS, as far as the consultation paper was concerned, was more around carbon reduction rather than carbon removals. And New Zealand didn't seem to be achieving the carbon reduction targets, even though we're removing carbon from the atmosphere through forestry. And there was this notion that you can't have carbon removals, as in forestry, in the same scheme as that's trying to encourage carbon reduction. Therefore, let's look at another way or other ways to deal with forestry within the ETS. And so there were 4 options outlined in that consultation paper,
Yep.
ranging from the very left-hand side, which was let's just tweak some levers around the auction, through to on the very extreme side on the other side, which was let's remove forestry from the ETS and have its own program, and maybe have one buyer being the government. And while there were 4 distinct options, it was actually I guess a sliding scale, and where government's going to land or where MFE is going to land, we're really not certain. But as we can see, with the decision made to reverse that December 22 outcome and reinstate Climate Change Commission's objectives, or adopt the Climate Change Commission's objectives from 2022, there was an immediate reaction by the market. Price spiked pretty quickly. It's now hovering at around that $70 mark from the lows that we hit in July of $34. It's steadily climbing, as you can see in that chart. It was hovering around $63 for some time, around sort of through September. And the reason for that is likely that it's related to the auction floor for 2024, which is around $63. So the secondary price has been hovering around that at that mark. However, we've seen it lift, certainly. The spikes that you see on that chart to the far right are forward trades, so they're not relevant for today, but they were transacted during September and October, where they've got a future settlement date, but the price has been agreed now.
Yep, so there's certainly some indication of sentiment and predictions. On that topic, like I should say, we don't have a formal safe harbor statement or similar at the start of this, but none of this is a prediction. Like Quintin and I don't know what the price is going to be. Quite a few of the questions we had come in were along the lines of, I've got some units, should I sell them now or should I wait into the future for the price goes up? We can't give guidance on that. Partly, we're just not in a position to do so. Secondly, we don't know. If we knew, then we'd be making a fortune speculating on the future carbon price. So this is a volatile market. There are speculators involved. The trends, we're sort of looking to diagnose some of the reasons that the price may have moved in the way it does, and there's some clear correlations, but it's not a forecast. Cool. Thanks for that, Quintin. Anything else you want to say while we're on this picture?
No, I mean, I'm sure there are a lot of questions that'll be generated from this, so happy to take questions.
We'll get to them at the end.
Awesome. Yeah.
Sweet. I'll try and fly through the rest. So there's a couple of other things that are going on at the moment that I'll briefly touch on. One is the new ETS fees that have been confirmed and introduced since we last spoke. These have been speculated and we've been talking about them since early this year, but they've now been they will be coming into effect. Whether that remains the case or not, there's court action that's currently in progress contesting the fees, but they do exist now. If you go to MPI's website, you'll see the new fees indicated there. I'm also going to speak briefly about the ongoing biodiversity credit consultation. We won't be able to really do that justice today, but there's a great earlier webinar we did with Finn Ross, who's doing some work in the space, which is worth checking out. And then a quick update on the backlog of registrations. ETS auction failures, where I'd love to have you chime in, Quintin. I think you probably already said maybe as much as we can say there, but any speculation around the upcoming auction. And then the ETS review, which was also just mentioned. And finally, I'll basically give a short summary of the National Party's presented policies as relate to forestry within the ETS. These were pre-election policies. Anything could happen. They're not binding commitments, but at least a snapshot of where things might go, as it seems we're on track to have a new government. So starting with the fees, there are new fees for 22 existing and new services. I've got a snapshot of some of the more relevant ones there on the right, but this is only a subset. If you go to the website, you'll be able to see all of them. One of the most contentious ones, although there were some new individual service fees that are extremely high and have a significant a large amount of friction that they create in terms of people's ability to transact. For example, a partial deregistration of a CAA could, I think it's like $6,000 or something. This creates obstacles to people using their land as they choose to use it, which may mean that they choose not to participate in the ETS. But the most contentious one has been this $30.25 per year for every hectare you have registered in the ETS, regardless of whether you make any changes for that registration. And the only exemption there is for Indigenous forests, and only when and for the period that they're less than 6 years old. Not 6 years since they were registered, less than 6 years of age. What this means for your forest, firstly, our response to the consultation for this is publicly available. We're extremely concerned about the introduction of a compulsory ongoing fee for all registered forest in general, because of not just the cost that it creates directly, but the precedent that it creates. When you register within the ETS, you have a lot of ongoing obligations. It's actually very difficult to leave and very expensive to leave in many circumstances. So being subject to relatively arbitrary, it feels like, fees introduced, which you then have to pay, and your only option is to deregister at significant cost, can potentially have a suppressive effect on the market, which means that the incentives to restore particularly native forests drop. And that's bad in terms of the policy goals in our view. We don't object to fees fundamentally. Like, the ETS is a valuable system. It doesn't come for free. There's a lot of people at MPI who are really busy making this whole thing work. But the exact structure of the fees as they are, we're concerned will have a disincentivizing effect on native forest especially. And we've already seen that effect now that they've been confirmed. Like, we have had customers choose to exit the scheme. This is compounded by the ongoing ETS review that we have, because the future price of units within the ETS is sort of, you're going to have to pay to participate as a forester. What are your returns going to be? There's the historic forecast return for forestry was at the upper end of the band for where the ETS price was going to go. If the result of the review is that the forestry market is segregated from the broader ETS market and that you move into some sort of sole buyer situation, it could be that the price is significantly lower. And that means that the fees would be even more negatively impactful in terms of their incentive effects. Another key point from our perspective is that these fees have a disproportionately large negative impact on native forest. From our perspective, this is just bad. We object to the way that the fees were designed and implemented with respect to natives. We think they should have had a broader exemption than just the 6-year exemption that they've had. And we think that this works against policy goals for the broader restoration of native forest, and they should have effectively had some form of larger cost subsidy. All of that said, and I'll give a couple of scenarios here, for most people, the ETS incentives will continue to provide a net benefit. It is very important that you check your specific situation, because it is situational dependent, considering the species of your forest, the age of your forest, in some cases the growing environment of your forest, and also just your own considerations for alternative land uses and lock and like. This isn't a one-size-fits-all sort of advice. You have to look at your numbers. And so I've pulled together a couple of quick examples here just to show the fees in context. So this here is the forecast returns, and I will share later on the carbon price curve that this is predicated upon, because it's not the carbon price today. We do have an assumption around the forward carbon price, and it could well change, especially if there was a change in the market structure through the reforms. But status quo as we see it today, this is for a radiata forest of 20 hectares established in 2023 and registered under a permanent regime. The little pink bit here is the MPI fees. And as you can't see, they're very small. This is not like to be a massive disincentive to the establishment of permanent radiata forest. It's going to be marginal. For registrations under averaging schemes, it's a little bit of a different story, because at least today, the fees apply regardless of whether your forest is earning carbon or not. So here we've got 20 hectares of radiata established in 2017 and registered under the averaging scheme. You're doing pretty well through until 2031, but at that point, your forest will plateau in terms of carbon sequestration, and the ongoing fees become just a net cost that you pay every year for no returns. 10 years is obviously far away. The regulator is not blind to this situation and the potential perverse incentives it creates, and this could be reviewed in the future, but there's no guarantee of it. And if it's not reviewed, then you would face those fees. If we now move to look at native forest, for newly established native forest, the fees are waived, as you can see, for the first 6 years. And then they are actually quite a significant fraction of the total yield for the sort of early age of the forest. Through the middle years, it's more sort of eyeballing that 5%-ish. It might not be a significant disincentive. But, and this is here as 20 hectares indigenous forest established in 2023. But as I said before, kind of keep this curve in your mind. This is based on an assumption of the forward carbon price, which I think into the sort of the mid-century where we were basing this on a speculative scenario of more than $100 per unit. If the price for forest units was to drop to, say, $30 a unit through some market reform and like reverse auction mechanism for purchase, the fees would actually be a large fraction of that. And it's even more of an issue as you get into the tail end of the forest age under the existing models for native forest sequestration. Once a forest gets to 50 years of age under the current models, the yield drops to 0, and you face the same ongoing cost as you do under the averaging model. But even in the sort of 40 to 50 age, native forests are growing relatively slowly, sequestering a relatively small amount of carbon, and you still face the same fixed fee. So here it's sort of eating up 40 to 50% of your return, and that's at the high carbon price. If it's at a future lower carbon price, the fees could well exceed your total yield, or at least be very close to it. This is all based on, as I said, speculative scenarios of NZU prices. There is no guarantee that the NZU prices will evolve like this. You can see we've got a plateauing. So our assumption scenario for these models is the green one. We're assuming that it sort of stabilizes around about $100. But this is just because to sort of help our customers, we have to give a scenario. We don't want to put you in a situation where we give you some NZU numbers and force you to pull out a calculator. It doesn't mean that this is actually how the world's going to develop. And it's particularly important to note that structural reforms to the ETS are likely to have an impact on the unit prices. We've seen in the past, like Quintin's just shown us, the level of impact that even the suggestion of structural reforms can have on the ETS price, let alone if they actually happen. And as I said earlier, falling prices will proportionally increase the impact of the fees. Finally, please do note that thing at the bottom there. I'm showing you a curve here. Do not trade on the basis of this information alone. This is not a forecast or a prediction. It's a speculative scenario that we use to try and put some context on what you're seeing. We do not have any special insight around the future prices other than just our general impressions from looking at future policy design considerations. So if I knew what the price was going to be, my life would be a lot easier. I also wanted to just say that, like I've been saying, what does this mean for your forest in a broad context? It's really important what it means for your specific forest, because the implications of the fees are specific to your forest and also your perspective. You should look at your specific results, which is for your forest area, your forest age, your forest species composition. And you can see this in the CarbonCrop platform, which is now live. So we now have, you can log into our website, view a full analysis of your forest, including the breakdowns by region. This is also available to non-CarbonCrop customers through partnerships that we're beginning to establish with forestry consultants. If you're interested, get in touch, and it will help basically provide you the same charts I've just been showing you, but for your specific forest situation, so you can decide what you want to do. Any comment you want to make on any of that? Quintin, your perspective on the fees?
No.
All right, I'll carry on. Biodiversity in the ETS. So the consultation is on at the moment. There's been an enormous amount of discussion around biodiversity credits. There's still a lot of uncertainty around what exactly a biodiversity is and how much 3 biodiversities are versus 7 biodiversities, and how you would quantify that and how you would trade it and how you'd create a market for it. If you're really interested in this space, then it's worth reading the consultation. This is a quick snapshot of our view on it, and I won't present this as emsTradepoint's view, but it'd be great if you can chime in with your perspective at the end, Quintin, especially where it differs from ours, because we're still working out our views in this space, and it's still a pretty early thing with a lot of evolution to do. Generally, we think that biodiversity is important as a starting statement, and that includes both restoration and preservation. Like, it's difficult to say which one matters more. Both of them are important, and they're important in different ways, and they have different costs. Because of that, we think that it could be worth considering a differentiation in the credits between restoration and preservation. And actually, that could be worth doing for carbon as well, because, you know, a mature large native forest is storing an enormous amount of carbon. Under carbon removal accounting, you can't get any recognition for that carbon. But that doesn't mean that it's worthless, and it could perhaps be that, so the market does today differentiate between avoided deforestation credits and forest restoration credits. And at the moment, avoided deforestation credits are basically worthless because so many of the projects associated with them have been pretty dubious. But it would be wrong to conclude from that it is a waste of time trying to protect and preserve mature forest. It is actually an extremely important thing to do, and we do have a deforestation problem globally. Perhaps differentiating between the two with biodiversity credits could help. We are quite concerned that current land use policy is somewhat punitive. It tends not to reward early positive actions. In many cases, it penalizes them, as in the case of significant natural areas classifications. Essentially, if you were a progressive aspirational landowner who restored a bunch of your bush, absent other mechanisms, the main thing that you've likely achieved is a restriction on your land use now that you've restored that bush. That we should make sure that we don't retrospectively disincentivize early actions. If you start doing something before it's the law, you should get the maximum benefits that people who waited and were a bit slower should get. And we feel that way for carbon as well. This is a very controversial one. Our view is that biodiversity offsets should be considered to help create an effective market. Many people are concerned that this would be used to justify negative impacts on biodiversity, and we also share that concern. If you're going to do this, you have to be extremely careful about how you quantify biodiversity and how you balance negative biodiversity impacts versus positive biodiversity impacts. However, the issue, if you just say there should be no biodiversity offsetting, it is never appropriate to use a biodiversity improvement in one place to justify a loss of biodiversity in another place. You could inadvertently remove a mechanism for paying for biodiversity improvements, because often they're not free. it may be more appropriate to say, all right, you can cause biodiversity harms, but we're going to be very good about how we quantify those harms. And for every harm you cause, you have to cause 10 times as much good. And then you could create a market mechanism that allows methods to pay for restoration. But it's a touchy topic, and you inevitably get up into, at the coalface of this kind of thing, questions like, is it okay to kill 10 kakapo if in the process you save 50 hectares dolphins? And whatever your answer is to that question, you will be in for a lot of controversy, which is why it's a touchy topic. Final 2 points from my side. There is going to need to be some interaction with the ETS, we believe, allowing biodiversity credits to be recognised alongside carbon benefits on the same land. And part of the reason for that is that biodiversity is not carbon and carbon is not biodiversity, even though they may in some cases be correlated. You don't want to end up in a situation where, for example, you do not attribute any biodiversity value to alpine tussock land just because it's not sequestering very much carbon, because it's still a high value landscape that has high biodiversity value, and we should find ways to protect and pay for it. Related to this, we believe that pre-90 ongoing carbon removals in native forest still matters, and that a biodiversity credit might help address the current lack of incentives there, but the fact that carbon sequestration is occurring should not be ignored and just swept under the rug. That's my spiel. Quintin, very keen to hear your perspective on the biodiversity space as well, and whether this is something you guys are thinking about or looking at.
Yeah, thanks, Nick. It is something that we're keeping an eye on. Certainly, there'll be some interaction with the ETS, and I guess from a market perspective, we're keen to support that. The interest that we're seeing from our participants, a lot of it is from pre-90 forest owners who might have had some, some wetlands or whatever in the same areas, and they can see some upside for them in the future if this develops as a market. The difficulty for me is that there's not a lot of definition around what that market might be. You can like who the purchaser of those units might be. So yeah, we're really keen to support it if this becomes a thing, and we want to, if it does become a market, we want to open it up, not like how the carbon market kicked off and it was very opaque. So
Yep.
yeah, generally we're very keen to support this as a market through our marketplace.
Excellent, thanks.
But
yeah, I think you sort of touched on
just waiting on definition. That's all, to see
exactly
where this lands.
And I guess there's two big questions. One is the form of the credit, like what is a biodiversity, and then the other is the form of a market. Is this largely a sort of voluntary, borderline philanthropic thing where it's just people trying to efficiently donate to biodiversity, or is there some natural market in the way there is for carbon where you can see the impact you're having and then pay to neutralize that impact, irrespective of your concerns about whether that's a valid thing? Like that's the big unknown for us. Cool. Cheers for that. Right, finally, briefly on the registration backlog, which I know will be on many people's minds. So when I say registration backlog here, I'm specifically talking about MPI's backlog of applications for registration in the ETS of post-89 forest. There is still a backlog. MPI are working through it. We're seeing great progress, but there were a lot of registrations in the hopper. The indications that we've had is that any applications made within 2022 after the deadline, so you weren't accepted before the end of 2022, but you did apply before the end of 2022, are likely to be processed this year. 2023 applications, there might be some exceptions. They'll likely get through some of them. They almost certainly won't get through all of them, but generally they're unlikely to be processed this year. However, a very important factor, unlike last year, this year, if your registration is not processed by the end of this year, you do not lose your entitlement to this year's credits, because we are now within a new mandatory emission return period, and it lasts until the end of 2025. As long as your registration is accepted before the end of 2025, you will get retrospective entitlement to all of your units back to the start of the period, being the beginning of 2023. That's under the current rules, at least. So I realize that it's been a long wait for many of you. We know MPI are working really hard on it, but it's still frustrating that it's taken so long for all of us. But it'll delay when you actually gain access to your units and you get a certain answer and you can actually begin to trade, but you shouldn't have entitlements at risk. Auction failures. I think you kind of covered this earlier. Quintin, is there anything further you want to say, looking ahead a month to the upcoming auction?
Again, it's one of those tea leaf questions, right? So the difference with the December auction, for those who aren't aware, is that the settings that should have been adopted have been adopted for December, which is quite a shift from the previous 3 auctions. So key changes there are the price floor lifts from $30 odd to $60. And we have 2 tiers of the cost containment reserve. So if those initial units clear, 1.5 million of the main auction units clear, and there's still demand, then the cost containment reserve of tier 1 lifts from $80 that it was to $173. So, and then there's a second tier of $216 if we need more units there. So the first tier of cost containment reserve has 2.9 million units, and the second tier has 5.1 million additional units. But there's still 13.5 million units unsold from the previous auctions to add to that 1.5 million units for the December auction. So yeah, it'll take a lot for the cost containment reserve to hit. And I mean, if history is anything to go by this year, then this auction would follow and not clear. But we don't know, because next year new settings come in, there's fewer units available via auction, the cost containment reserve lifts again, the floor price lifts again. You could have somebody who's desperate who sweeps the market. Could do.
Yep. Sufficient access to capital, and it's really going to be down to speculation on the future market evolutions and obligations, because for the way the auction price thresholds evolve over the coming years, even the minimum available, like current prices, would be cheap based on the current settings. And I guess it's really the willingness of various actors to speculate there or to hedge their position against future price movements that are probably going to drive the outcome. Because if you can confirm, for this auction to clear, we either have to have insufficient bids for the total quantity above the floor price, above the confidential reserve price, or there have to be bids for the full 15 million odd units, 13.5 million, whatever the number is, which is, there we're talking about close to $2 billion worth of carbon. Is that right? At $70?
Yeah.
70 times?
It's
roughly a billion roughly. Yep. A lot of money. We do have occasionally questions from our customers about whether they can participate in this process. So the short answer is that yes, you can. In principle, I think the minimum bid size is 5,000 units, right?
5,000.
So cost to play is 5,000 times the current unit price, call it $70. It's 350.
And you have to, you have to stump up. Yeah, you have to stump up with the deposit too. Prior to the auction, I can't recall what that is.
I actually thought it was the full sum in an escrow account in advance. I may be wrong, but yeah, it's serious money. So you can participate, but it is for major buyers only, and you can't sell through the auction, in case that's something that's but the auction price does influence the secondary market price where you can sell.
Yeah, that's right.
Cheers for that, Quintin. So finally, on the review, which we talked about before, I'll keep this fairly short because we've got a lot of questions and I hope we can have some time to get to them. I realize we're running close to the end of the session. The consultation for the review closed on August the 11th. Nothing has been released out of that consultation yet that I'm aware of. Any decisions around the consultation will be a matter for the next government. So it's unlikely that anything dramatic will change in the short term. Which brings us to the election. So Quintin, working for an SOE, has to be very careful here and will sit quietly. My views do not represent his views necessarily. I will give you a fairly sanitized perspective because we also don't have any crystal ball here. I'm just going to list a couple of Nationals policy and give some little bit of explanation around them. So it's looking pretty likely we'll get a new government. I'm not saying certain because you never know, but reasonable speculation. Their policies will impact the ETS. Whether they impact the ETS in a way that keeps everything the same or changes things, who's to know? That depends on which policies they have. Here are some of the pre-election National Party policy indications. Take this with a grain of salt. I pulled it from their website probably about 25 minutes before this presentation. I've done my best and I think it's correct, but it may even have been replaced by updated pre-election policy that post-dated the snapshot that I took. It's just a snapshot, and it doesn't necessarily represent what they may end up doing. Couple of points. National voted for the Climate Change Response Act, and they support it. And the statement from Chris Luxon, the lead up to the election, was that they support the targets, which is good because climate change response is a pretty important thing. Jumping directly to forestry specifically, a couple of the proposals that National had around the risk of farm conversions to forestry were a moratorium on whole farm conversions for land in the land use category 1 to 5 category, a limit of 15,000 hectares of whole farm conversions for land in the LUC 6 category, and no limits at all on LUC 7 to 8 land. So basically trying to push for reforestation of marginal land from a farming perspective, as opposed to high value agricultural land, which we have seen some conversions on in recent years as the carbon price went really high. Related though, they do allow for up to 25% of a farm to be established in forest, even on LUC 1 to 6 land. And that is because they want to allow farmers to partially, basically do various amenity partings and partial conversions to help with their climate change response and climate resilience work. And also, at least in this indication, there were no limits whatsoever for native trees. So this all applies to exotic trees. Finally, National indicated that they would expand recognition of on-farm sequestration. Exactly what that means is an open question. Soil carbon has been postulated. Ongoing carbon removals in pre-1990 native vegetation has been postulated. Ongoing carbon removals in smaller area of vegetation has been postulated. Much of this discussed in the context of Hawake Kanoa, but there's been nothing concrete. And again, none of this is guaranteed. This is just pre-election indications. I won't ask you for comment there, Quintin. I'll just carry on quietly. If you're looking for more info around any of this, take a look at our blog, take a look at the emsTradepoint website. It's excellent. But yeah, just in closing, thanks everybody for joining us. Thanks for your ongoing interest and your questions. And thanks very much to you, Quintin, for taking some time out of your day and sharing your expertise and your perspective on what's coming and what's been.
Yep, thanks, Nick, and everybody else.
All right, thanks a lot all. Enjoy the rest of your day.